Okay, so, when we talk about inflation and, trying to protect your money, most people think about, their savings account or cutting back on spending a little bit. But what if there's a whole other way to handle it, like a whole secret playbook?
Yeah, a strategy that most people don't even know exists.
Exactly, one that's built on like these exclusive banking relationships and plays out on like a global scale.
Right, and that's exactly what we're diving into today, like the world of offshore finance.
This is the stuff that you see in the movies, right?
Kind of, but we're
Right.
going to break down how it actually works. Like, how do high net worth individuals use this stuff to deal with inflation?
So no clipping coupons for these guys, huh?
Definitely not. We're talking private banks, international jurisdictions, serious asset protection.
Okay, so we've got a ton of research here about inflation itself, global economic trends, and some of the tools that are out there for a very select few.
And what we really want to understand is how these individuals use these tools, right? Like private banks, offshore accounts, which are often located in these places called tax havens.
Tax havens, that sounds shady.
Well, we'll get into that, but the point is we're going to unravel these global financial strategies with a focus on Swiss banking.
Okay, so like the James Bond stuff.
Exactly. And we'll see how all of this is used to manage wealth when inflation is a big concern.
All right. And just to be clear, we're not talking about your everyday checking account here, right?
No, not at all. This is a completely different world.
Okay, so before we get into all the fancy strategies, we need to understand the problem, right? Like, what is inflation and why is it such a big deal?
Well, one thing that really stood out to me was this 2023 FADS note, and they talk about how uncertain things are right now, like short-term interest rates. The uncertainty is at a 10-year high.
So even the experts don't really know what's going on.
Right, and that makes it hard to predict where inflation is headed and how the Federal Reserve is going to respond.
Because the Fed is the one who's supposed to like control inflation, right?
Yeah, in theory, but they only have so many tools. And a Forbes article we looked at pointed out that their main tool is interest rates.
So they can make it more expensive or cheaper to borrow money.
Exactly, but that doesn't fix everything.
Like, what about those global supply chain issues we've been hearing so much about?
Right, those can cause huge price increases, and the Fed can't just snap their fingers and fix that.
So it's kind of like treating the symptom, but not the disease.
Exactly, and the World Economic Forum actually talked about some of the bigger trends that could keep inflation going for a while.
Like what kind of trends?
Well, one thing they highlighted was deglobalization, which basically means countries are becoming less reliant on each other for trade.
It's like less international trade.
Right, and that's partly driven by geopolitical tensions and this push to make more stuff domestically.
Okay, but how does that cause inflation?
Well, it can lead to higher tariffs, which are basically taxes on imported goods.
So stuff gets more expensive.
Exactly. And then businesses have to pay more to get the supplies they need, and eventually those costs get passed on to consumers.
It's a chain reaction.
Right, and the changing relationship between the West and places like Russia is a big part of this whole dynamic.
So it's not just about economics, it's about politics too.
Exactly. Now, here's an interesting twist.
What's that?
There's this article from Psychology Today that argues that remote work could actually help lower inflation.
Huh. That's not what I would have guessed.
Right, it seems counterintuitive, but their argument is that remote work could lead to slower wage growth.
Because people are willing to take a pay cut to work from home.
Yeah, to some extent, plus companies can save money on office space and other overhead costs.
So their expenses go down, which means they don't have to raise prices as much.
Exactly, and since wages are a big part of business costs, it makes sense that slower wage growth could lead to lower inflation.
That's really interesting. It's like a whole new perspective on the situation.
Right, and then if we look closer to home, the Federal Reserve Bank of Chicago did some research on regional differences in inflation.
So like, why is inflation higher in some parts of the U.S. than others?
Exactly, and their findings suggest that it's mostly driven by changes in housing prices, not really by what people are buying.
So it's not like people in California are buying more expensive stuff than people in Ohio.
Right, it's more about the cost of housing itself.
That makes sense. Real estate is a huge part of the economy.
Right, and in some areas like the Northeast, transportation costs also played a role, but overall housing seems to be the biggest factor.
Okay, so we've got a pretty good understanding of inflation. Now let's shift gears and talk about how wealthy individuals manage their money in this environment.
All right, so we're moving into the world of exclusive banking.
Private banks, all that.
Exactly. And it's important to understand that their financial world is completely different from the average person's experience.
Like they're not worried about overdraft fees.
No, not at all. We're talking about highly personalized services tailored to high net worth individuals.
So what kind of services are we talking about?
Well, things like bespoke investment strategies, sophisticated estate planning, and this is key for our discussion, access to international financial jurisdictions.
Okay, so that's where the offshore stuff comes in.
Exactly. The idea is to diversify not just their investments, but also where their assets are held.
So spread the risk across different countries.
Right. And different legal frameworks.
Okay, so that brings us to offshore accounts and these tax havens.
Right. An offshore account is simply a bank account located in a country where the account holder doesn't live.
Okay, and a tax haven
It's
is.
basically a jurisdiction that offers favorable tax policies or greater financial privacy compared to the account holder's home country.
So why would someone use an offshore account?
Well, there are a few reasons some people do it for asset protection.
Like they're worried about getting sued or something?
Right, or they want to protect their assets from creditors.
Or is like a shield?
Exactly. Others might use offshore accounts to take advantage of different regulatory environments.
So like looser rules
It could be, and of course, some people do it for tax optimization.
to pay less taxes,
Within the bounds of the law, of course, but it's not as secretive as it used to be.
right? The OECD has been cracking down on that stuff.
The Organization for Economic Cooperation and Development, yeah, they've been pushing for greater tax transparency and international cooperation.
So basically making it harder to hide money.
Exactly. They're trying to close the loopholes that allow for tax evasion and aggressive tax avoidance.
And they're sharing information between countries.
Right. So tax authorities can track financial activity across borders.
That makes it a lot harder to get away with anything shady.
Exactly. And it shows that there's a global effort to bring more oversight to this world.
And it's not just the OECD, right? The Bank for International Settlements also keeps an eye on things.
The BIS, yeah, they regularly publish reports on international banking and financial markets. So it's definitely a well-documented and monitored area.
Okay, so with all that in mind, let's talk about Swiss banking.
All right. So this is where the image of secret numbered accounts and all that comes in.
Yeah, Switzerland has this almost mythical reputation for financial secrecy.
Right. And historically, they've been a major player in private wealth management.
What makes them so special?
Well, they have a long tradition of discretion and client confidentiality.
To like a vault for the ultra wealthy.
Kind of. And that reputation has attracted people from all over the world who want a secure and politically neutral place to keep their money.
Makes sense, especially during times of global instability.
Exactly. Now things have changed a bit with international agreements on tax information exchange, so it's not as secretive as it used to be.
But they still have a strong reputation.
Yeah, for their expertise in managing private fortunes, and that political neutrality is still a big draw.
Okay, so we've talked about holding assets in different countries, but how does that actually help with inflation?
Well, a key strategy is global diversification of investments.
So don't put all your eggs in one basket.
Exactly. And a Motley Fool article we read explained how this can work. You include global stocks and bonds in your portfolio.
So you're not just invested in the U.S. market.
Right. And the idea is that different economies will experience inflation at different rates and at different times.
So if one market is struggling, another might be doing well.
Exactly. And that helps to even things out and protect your purchasing power.
But this is more than just stocks and bonds, right?
Oh, yeah. For high net worth individuals, it can get much more complex.
Like what kind of stuff are we talking about?
Well, they might invest in international real estate private equity funds focused on emerging markets or other specialized global assets.
Stuff that most people don't even know exists.
Right. They have access to a whole different world of investment opportunities.
And I'm guessing asset protection is a big part of this too, especially when you're dealing with assets in multiple countries.
Absolutely. The goal is to shield their wealth from various risks.
Like lawsuits or creditors.
Right. Or even economic or political instability in their home country.
So they're trying to create layers of protection.
Exactly. And they do that by using offshore structures like trusts or foundations that are set up in these international jurisdictions.
So it's like a legal firewall.
Kind of. And it makes it much harder for anyone to come after their assets.
Okay, one last thing, we saw an article about building an inflation-resistant portfolio.
Right. And most people would think of things like commodities or inflation-protected bonds.
But the wealthy probably have a different approach.
They do. They might use a wider range of alternative assets like fine art or rare collectibles.
So like investing in Picassos and vintage cars.
Exactly. Or they might invest directly in infrastructure projects or private lending opportunities.
It's a much more sophisticated approach.
Right. They have access to resources and expertise that most people don't, so they can build a truly customized portfolio.
Okay, so to sum it all up, we've really explored a hidden side of finance.
We've gone deep into how high net worth individuals manage their money, especially when it comes to inflation.
We've talked about private banks, offshore accounts, tax havens, Swiss banking, global financial strategies, asset protection.
It's a complex world, but hopefully we've shed some light on how it all works.
And it's important to remember that this is a very specific segment of finance.
We're not talking about your everyday banking experience here.
This is a whole other level.
Right, and it raises some interesting questions.
Like what?
Well, in a globalized economy where everyone is interconnected, what happens when different groups of people are using such different financial strategies?
That's a good question. How does that affect the overall system?
Right, and how do major economic forces like inflation impact these different approaches to managing wealth?
It's definitely something to think about.
Yeah, it's a reminder that the world of finance is vast and complex, and there's always more to learn.
All right, well, that's all the time we have for today's deep dive.
Thanks for listening.
And be sure to check back next week for another fascinating exploration of the world of finance.
We'll see you then.
Bye.